A lot of day traders love to day trade all day. But what I like to focus on is the first hour of the day. And that starts at about 9:35 and goes to about 10:35. Now, it's not that I don't want to day trade any longer than that. It's that the impact, the positive impact on my account just isn't the same when I take trades after that period of time. And I'm talking East Coast time, New York time. So let me walk you through two trades that we took in the Sector Secrets Mastery this morning in that 1 hour window. And the first up was a very aggro. Now, aggro is my way of saying reduce position size, tighten the stop, right? There are some things that I don't like about it. There are some things that I do. And so I like the trade enough to take it, but I don't like it enough to give it a long leash. So the idea was to buy the AMD 12 September 160 call. You can see that right here in the notes. And the idea was to wait for 160.20, which is right about here, which is the bottom edge of this zone called the hourly price movement range. So we bought those calls in that zone, and I paid $2 and let's see, about 50 cents for those, about $2.50. So $250 each. Now you'll notice the risk was 15%. So my risk is 15% of the $2.50. Not all, right? Most options traders, swing, day trading, whatever, they use 100%. I do not use 100% because I know that after a certain amount of loss of premium, the trade's probably not going to recover. And then rather than just waiting for or hoping that it will recover, we use a stop loss based on the value of the option. So we bought those for $2.50. Now it took the scenic route and it got really close to the stop loss, but it did not stop us out. And that 15% can give you a lot of wiggle room. And off it went to the upside. Now you'll see here the scale out. We already have this plan. I'm not waiting for something to happen. The whole trading plan, what we're buying, where we're getting in, where we're getting out, and the first target are all part of the alert. So I'm looking over here. We hit 250. We hit that 162 after buying it for $2.50. You can see here we hit it right around 11:05. And at that time, these options were trading for about $3.65. So bought it for $2.50, scaled out at $3.65, and then we moved the stop to break even. Now, as the day goes on, if it meanders right back down to $2.50, which it did, we're going to be stopped out at break even. So if we're buying multiple contracts of a $250 option, let's say you bought two, you scale one out when it reaches the target, which was $365 per contract, and then you can put the other one at a break even. So yes, you're risking unrealized profit, but you're not going to let a winner, which it was, turn into a loser. So that was the first trade of the morning. And this is where overstaying the welcome past the first hour of the day can be really tricky. All right, the next trade, for those of you that like futures trading, and for those of you that like trading the ETFs based on the futures, the next trade was TLT. Now, notice the way that I presented the idea, which is buy the TLT 10 September 88 or 87.5 call. Both were valid. One's slightly deeper in the money, one's at the money. It's really a matter of budget. So what I teach traders in the Sector Secrets Mastery is the number of contracts you can buy isn't on a fixed number of I always buy 2 or I always buy 4, which presents different amounts of risk to the account. What we do is we use a fixed number of dollars or a fixed bet size. So in this case, we waited for the bond market, the bond futures, to trade down to 117.04. And notice what time we sent this out, just before 10 o'clock. So around that, here, 117.04, 9:45 we touched it, but my alert wasn't out there yet. By 10:05, we've hit it again. And then for the next 20 minutes, we stayed in that area. So whether 117.04 was able to be triggered at the 10:05 candle or the 10:10, 10:15, 10:20, for a good amount of time, TLT just hung around that entry level. Now, if you're a futures trader, you buy it at 117.04. If you like to trade the options on the ETF, TLT, you buy the 88 or 87.5 call. So I'm going to change the view here and show you what that looked like, because one of the things we like to do in the mastery is actually chart the option when we're bidding on it and when we're managing profit and loss. So as we talked about 10:05, we got down to that area and you can see these options right here. And this is the 87.5. If I can go deeper in the money, I will by a little bit. So these cost $1.75, and I picked some up at $1.75. And if you bought the 80, they cost about $1.23. So they're less expensive obviously when you're not deeper in the money. So these are the 87.5s, $1.75. And you'll notice here, once again, we have a 15% stop loss. So on $1.75, I'm risking 15%. This thing took almost no heat. You can see here, just kind of kept bouncing around the 173 area. No problem. That's nowhere near 15% loss on a $175 contract. It started to move higher. Notice the first scale out is when we reach 117.08. Now, the bond futures, let me show you here on the chart. Because for you futures traders out there, and for those of you that like to trade the TLT, you really want to watch the futures. So what we want to do now is, okay, when do we hit 117.08? Boom, right there. And there's 117.08, and we hit it at, as you can see there, 10.45. All right, where were these options trading? The 87.5s at 10.45. Now, if you're struggling to get your entries, one of the cool things you can do is plot the chart of the very thing that you're trading. And sometimes you can see where it's traded before and take profit. So that was basically, you can see here, just shy of $2. All right, now we don't get out, right? Remember, like we did in AMD. What am I going to do? I'm going to pay myself. Am I excited about 20 cents? No. But what I am excited about is the ability to, one, reduce position size by paying myself. It covers fees and commissions at this point. And then I move to a break-even stop. Now, I'm not stopped out. We never got near the break-even entry around here, right? So the 87.5s kept climbing. And then up here, you can see they reached another resistance area. And at this point, one of the things that I teach my traders is know your numbers. So let's do some numbers here really quick. So on TLT, we paid $1.75, right? So what I'm going to do is I'm going to multiply that by 0.85. So my stop loss on this trade is approximately 148. I like to give it a 5-cent wiggle to account for the spread to 143. So as long as it doesn't drop down to that level, I'm fine. You notice it never got even close to that. But when we hit the target, the first target, I moved to break even. A great target to have for a second target is simply if the option doubles. Now, we never got near 350, right? So I don't have a 100% gain on this. But what I can do is go back to those bond futures and ask myself, all right, where is the resistance in terms of where we are right now and where the price seems to be stuck? Well, what I'll do, rather than using some subjective metric, what I'll do is say, hey, have we reached resistance? And there's a couple places we hit resistance. Right here is the most obvious, and this is shortly after 1 p.m., we hit the resistance of the hourly price movement range. And these are all automated zones, so if you're just able to look at these zones and say, oh, that red is resistance, that's a great place to take the second target. And that would have been shortly after 1. And at that point in time, the TLT, and I'll tell you what those are trading at. They were trading at about $2.35. Remember, 175 on the entry, 235 here on that second target after scaling out at about 195. I'm not getting out of bed for 20 cents. However, what it allows me to do is manage risk with a break-even stop, and then the second target starts to become a much better trade. Now, here's where I tell my traders, look, I'm not looking to buy one contract at 175. Depending on your account size, you might be able to buy 2, right? Some of you say, Rog, I could buy 10. Great. That's going to cost $750 worth of calls. You scale out at the first target. Maybe you're going to scale out of 1/3 or as much as 1/2 of the position, but that leaves 2/3 to another half of the position open where you can scale out at a 235. And if you scaled out at, say, 3 contracts here, okay, 60 cents. But let's say you scale out of another 3 contracts here. So at this point, now we're talking about a much better return on that initial risk. And remember, by the time we're hitting 235, this is now, I don't ever want to call it risk free, but it's a break-even stop. I'll close the trade when it comes back down to below 5 cents what I paid. So at that point, above 195 becomes just reward management. I'm not in risk management mode any longer. And those are the 2 day trades that we put in with a little bit of an explainer. Now, when we're putting on trades like this, I'm going to be done by 10:30. That's the whole idea. To be able to put on trades like this in the first 60 minutes, about 9:35 to 10:35, which again, I have found to be the best day trading hour for myself. And what that does is it opens up the next hour for me to put on swing trades, look at trades on a 1 hour or a daily time frame where I'm looking for overnight positions that might last for days, if not weeks. And that is the way that I separate out the 2 styles of trading that I like to do. So I'll put more of these day trading recaps up. Hopefully this gives you a good idea of what we're doing, the kind of tools we're using, the automation that we rely on with automated Darvas, automated hourly price movement ranges, which measure volatility, and find trades like this every morning.